State Farm cancels you. You go to Allstate. Allstate cancels you. You go to Farmers. Farmers cancels you, and you go to the Fair Plan. It is literally a game of musical chairs. And look, you know the system is broken when the conspiracy theories start sounding less like paranoia and more like a quarterly earnings call. Because for the last year, homeowners in California, Florida, and Texas have felt like they're going crazy. You open your mail. Your insurance premium didn't just go up, it doubled.
Well, we found what I think every homeowner knows, that insurance policies have been soaring for the past couple of years. The numbers, though, show that they've been going up way higher than the annual rate of inflation. Take a look at these numbers. First of all, this is government data. It shows that between 2021 and 2024, overall inflation rose 11%, but the average homeowner's insurance policy shot up by 24%.
Or worse, you got the letter, non-renewal. Cancellation. Thanks for the 30 years of loyalty. Good luck with the fire. And you thought, is this personal? Is it my roof? Did I miss a payment? No, it's a strategy. In March 2025, a video leaked. A State Farm executive seemingly caught on a hidden camera admitting the exact playbook the entire industry is using from California to Florida.
Like in Marin County in Northern California, or some of the fringe areas like where the Palisades are, it can never be houses before. Like, people want to be built in areas where they'll have like natural areas around them for their ego.
He allegedly admitted that they use cancellations, dropping tens of thousands of policies at a time, not just because of risk, but as leverage, as a bargaining chip to force regulators to let them jack up the prices for everyone else. He basically said, we tell the state we're overexposed. They say no to rate hikes, so we say, okay, watch this. And then they pull the plug on your grandma's house. This isn't a business decision. This is a hostage negotiation. And guess what? You are the hostage. But if you think that's the scary part, strap in, because what that executive didn't say is actually terrifying. He didn't tell you about the secret climate epiphany the global banks had 3 years ago. He didn't tell you about the mitigation scam that is currently robbing you of thousands of dollars. And he certainly didn't tell you that this entire mess is following the exact same script, step by step, as the 2008 financial crisis. Only this time, it's not your mortgage that's toxic, it's the ground your house is sitting on. So let's start with the insult before we get to the injury, the mitigation myth. So if you live in a fire zone, you have been told a very specific story. Take personal responsibility. Hardening your home is the answer. So you do. You spend $15,000 on dual pane tempered glass windows. You spend $30,000 on a Class A fire-resistant roof. You clear the brush until your backyard looks like a Zen garden on Mars. You spend $50,000 making your home a fortress. And then you call your agent at State Farm and say, hey, look at me over here. I'm a good boy. How much money do I save now? And they tap their little calculator and they say, congratulations, here's your discount. Do you know what the average discount is for those windows? 0.1%. Let me do the math for you, because it is breathtakingly stupid. On a $13,000 premium, you save $14 a year. That is one Chipotle burrito. You spent the price of a Tesla to save the price of a burrito. At that rate, your windows will pay for themselves in the year 3,096, by which time we will all be living underwater or fighting over gasoline in the desert like Mad Max. It is a statistical slap in the face. Research proves these upgrades reduce fire risk by 40 to 75%. But the insurance company gives you a discount that is literally a rounding error at a lemonade stand. Why? Because, and this is the part they don't say out loud, they aren't insuring your house. They are insuring your whole zip code. You see, they don't care that your roof is made of asbestos and holy water. If your neighborhood has a pile of dry leaves and a propane tank, you are uninsurable. Your personal responsibility, it's meaningless in their spreadsheet. And the irony, the Fair Plan, the state-run insurer of last resort, the one that is supposedly broken and broke, offers higher discounts for mitigation than the private market. When the government bureaucracy is making more sense than the free market, you know you are in a simulation. But why? Why would they turn down your money? Why would they flee entire states? Is it just woke climate politics? Is it corporate greed? It's actually something much more boring and much more dangerous. It's called reinsurance. You see, State Farm and Allstate, they don't actually hold all of the risk. They buy insurance for themselves from companies that you have never heard of. Massive, shadowy global entities like Swiss Re and Munich Re. These are the guys behind the curtain, the Wizards of Oz. And about 3 years ago, these guys had a climate epiphany. They looked at the data, they saw the fires in California, the hurricanes in Florida, the floods in Louisiana, and they realized these aren't once in 100 years events anymore. They are every Tuesday events. So they didn't get greener. They got panicked. They doubled their prices between 2018 and 2023. That alone accounts for 20% of the skyrocketing premium you just paid. But get this, when the reinsurers say we aren't covering California anymore, State Farm cannot write a policy for you. Legally, they can't do it. So when you're yelling at your local agent, realize that he is just a cashier at a restaurant where the kitchen burned down 3 years ago. This is a global capital strike, and you are the one paying the bill. And this leads us to the trap door. Because when the private guys leave, where do you go? You go to the FAIR plan, or Citizens, depending on where you live, the insurers of last resort. And it sounds comforting, doesn't it? Like a safety net. But it's not a safety net. It's a financial landmine. The FAIR plan has exploded in size from $50 billion in exposure to nearly $460 billion. But here's the problem. The FAIR plan coverage is capped at $3 million. Now, if you live in the Palisades or Tahoe, Malibu, or parts of Austin, your home might be worth $4 million or more. Your land is worth $2 million. You are legally uninsured by millions of dollars. Now, watch the magic trick. Your bank knows this, but they approve your mortgage anyway. Why? Because they don't keep the mortgage. They package it up, wrap it in a bow, and sell it to Fannie Mae and Freddie Mac. The taxpayers. Us. Does this sound familiar? Does selling toxic assets to the government while pretending everything is fine ring a bell? Yeah, it should. It's 2008 all over again. But instead of subprime borrowers, we have subprime geography. Harvard Business School just released a report screaming about this. They are warning that if the FAIR plan collapses, it could trigger a cascade of mortgage defaults that would make the Great Recession look like a bad weekend in Vegas. And the FAIR plan is collapsing. It just got approval to charge insurance companies a $1 billion assessment to cover losses. State Farm has to write a check for $165 million. And you think State Farm is going to eat that loss out of the goodness of their hearts? No. They are allowed to pass 50% of that cost directly back to you. And if the assessment goes over $1 billion, they can pass back 100%. Do you understand what that means? It means you, living in a safe house with a safe roof in a safe neighborhood, are getting a surcharge on your bill to pay for the fire damage of a house 3 counties away that shouldn't have been built in the first place. It is a bailout tax, and it is hidden right there in your fees and surcharges line item. Now, I know what you may be thinking. Well, Matt, don't build in the woods. If you build in a fire zone, you deserve what you get. Stop. Let me introduce you to Orinda, California. This isn't some off-grid cabin community for survivalists. This is a wealthy, planned suburb. Median home price, $2 million. These people are not reckless. They followed every rule. They cleared the brush. They upgraded the vents. They did everything the fire marshal asked. And in 2024, just last year, State Farm dropped 55% of the entire town. 1,700 homeowners gone overnight. One woman, let's call her Shannon, spent 50 grand on upgrades. Her premium went from $3,000 to $8,000 after the upgrades, but she paid it. She didn't complain, and then she got canceled anyway. She went to a town hall meeting in tears because not a single company on earth would insure her home. She has a mortgage, she has equity, she has a fortress home, and effectively, her asset value just went to zero. Because who buys a $2 million home that you can't insure? Nobody. Cash buyers? Maybe, but they're going to want a 40% discount at least. This is the wealth destruction event nobody's talking about. In zip codes across America, home values have already dropped by an average of $44,000 due to climate risk. But that is just the beginning. New data suggests we could see a 30% crash in these zones. That is $3 trillion in household wealth. Gone. That is half the size of the 2008 crash. And it is happening in slow motion right now. And this is the part that hurts the most, the betrayal. You see, in 1906, after the San Francisco earthquake, insurers stayed and paid 47 years of profits to rebuild trust. Today, they'd rather burn the relationship to save a quarter. There is no loyalty. There is no reputation. State Farm cancels you. You go to Allstate. Allstate cancels you. You go to Farmers. Farmers cancels you, and you go to the Fair Plan. It is literally a game of musical chairs, and the insurance companies are the ones pulling the chairs away. Modern finance doesn't care about reputation in 1906. They care about the quarterly earnings report in Q4 of 2025. They optimize for the spreadsheet, not the customer. And you are just a cell on that spreadsheet that turned red. So, here we are. You are standing in the alley. The system has beaten you up, taken your wallet, and left you with a cancellation notice. You can't rely on loyalty. You can't rely on mitigation discounts. So, what do? First, you have to accept the hard truth. We are looking at 4 possible futures, and none of them involve going back to normal. Option 1, the federal bailout. The Fair Plan collapses. Uncle Sam steps in. We all pay higher taxes to subsidize homes in fire zones. It's ugly, but it keeps the banks solvent. Option 2, the managed retreat. The government starts buying out homes, cash for keys, but for entire neighborhoods. You take the money and you move to Ohio. Option 3, the new model. We switch to something called parametric insurance. Basically, if a fire hits your area at a certain intensity, you get a check. No adjusters, no arguments, just a check. But it costs a fortune. Then option 4, nothing. The market just collapses. Only the super rich can afford to live in the hills because they can self-insure. And the middle class gets pushed out to the flatlands. My bet, it's going to be a messy combination of all 4. But while the politicians figure that out, you need to protect yourself today. So step 1, check your risk score. California just released a new interactive map that shows your specific wildfire risk score. Insurers are using this data against you. You need to see what they see. Even if you aren't in California, find your state's equivalent. Know your number. Step 2, document everything. If you do mitigate, if you clear brush, if you upgrade your roof, document it like a crime scene. I mean photos, receipts, certificates, because when the cancellation letter comes, and it might, you need to be able to prove to the next insurer that you aren't a liability. Step 3, run your home like a business. This is the most important shift that you can make. The insurance companies, the tax assessors, the banks, they are all looking at your home as a collection of data points and risks. But most homeowners are just looking at their home as a stack of bills. You are flying blind in a game where everyone else has X-ray vision. And that's why I pulled this video out here for you to watch next. It shows you a specific 60-second asset checkup that reveals the blind spots most people never see, from hidden tax assessments to title risks, before they become emergencies. And you'll see exactly what that looks like in this one right here, and how to finally get the clarity you need to sleep at night, knowing that you aren't leaving the back door open for the system to walk right in.